Alright traders, welcome back to another price action trading video. We're going to study charts following price action rules to help us identify high probability setups. And right off the bat, I can see that the structure is creating series of high highs and high lows. This blue line, which is the 21 bar exponential moving average, is pointing up, and this is a bullish uptrend. We even started the day with a big bullish spike. So my goal as a price action trader is to identify a channel, some form of a pattern, because these candles are always following some pattern. They are not just randomly being printed on the chart. And if you want to follow the institutions, the players who can move the market, we can use price action tools to help us stay on the right side of the market. So my goal is to identify a channel, and the channel I identified today, I start with the channel like this, because the first two swings will start the trend line, third swing will confirm it, just gonna copy it, put it at the top, and the prices are fitting nicely inside this channel. And not only that, I'm not only looking for the main channel, I'm also looking for the channels for the bearish corrections, because I need to respect the trend line rule even for the corrections. It is important because after this downtrend has a break in new extreme, which it did, it created downtrend, break outside, close outside, new extreme. This is indicating to me that this bearish correction played out and I can safely look for longs. And what is going to be a high probability setup? Well, let's take a look. We have a first leg down, pullback, second leg down. So we know the downtrend played out, larger two-legged pullback because market likes to move in pairs of twos, indicated that the correction played out. And also after the first leg, prices created a consolidation area, 10 bars stacked right next to each other, indicating congestion. And this right here is smaller trading range. And according to price action rules, most breakouts of trading ranges will fail. And this right here is a small variation of a trading range. We broke lower and we have a failed breakout with the direction of the main trend. So this right here is the first high probability setup for the day. Not only it is a failed breakout out of the smaller trading range, so you want to fade it. Two-legged pullback played out, and this main channel just has a break, and according to rules, you expect for prices to create new extreme. Notice prices shortly after pushed above EMA and created new low. First entry short, pullback, second entry short. Why are we counting for second entry short in bullish structure? Well, because it can trap sellers and it can be additional high probability setup. Not just two-legged pullback to go long, but also two-legged pullback to sell to trap sellers. And we have a failed second entry short. Notice the sellers are looking at this smaller resistance, justifying their reasons to sell, but the structure is bullish and this uptrend needs to get new high. And notice how prices are still respecting this trend line, is still coming into play. So this right here is a decent setup. It was very hard to catch this failed second entry short because prices never came back with the limit order. It is a little bit more advanced because you're going long quite high, but since the key entry points are holding, the shorts got trapped so nicely, thinking the resistance is going to hold, kind of like a breakout pullback pattern too. Decent setup. After that, market continued working higher, and notice a very strong uptrend has started, which means we are still looking for two-legged pullback at the EMA, which never came. We just had a bunch of first entries, which the first entries never even pulled back close enough to exponential moving average. So you're really taking entries far away from EMA. You never want to be concentrating. You never want to be thinking that the trend is going to reverse. We are way too overbought. There's some room to EMA. You always want to follow the trend because you can see every single reversal attempt will fail. When you see small little bars working higher like this, this is a very strong trend. And notice when I see this, I have a break, I have a new extreme. But I need to reanalyze the structure here, because if I have a break new high, I should have some form of a correction at least. But I have no correction, no reversal, no pullback, very strong bullish rally even after new high. Right now, I'm safe to slightly extend the channel like this. Okay, you can see prices are working higher. And now we have overshoot, which means that this can create a stronger momentum in opposite direction and we can break the channel or straight up reverse. Now, if I see such a massive, strong uptrend like this, I'm not too afraid of the overshoot, but I'm still going to respect the short-term channels. Notice, short-term channel working to the downside, break, new extreme, indicating that the downtrend played out. And since the prices are working to the upside, at each new high, I start the count over, counting for a second entry long because it's going to be a high probability setup. So this is the highest high, where I'm going to reset the count. You have first entry long, pullback, second entry long. But this second entry long is not at the key entry point just yet. It's after overshoot. It's kind of hanging in the middle of no man's land. So this is not really a great entry to take just yet. But notice shortly after we have a short trap. Why is this a short trap? Well, because structure is bullish. So according to rules, we're just following the trend. Price action created a break new extreme. We have a first leg down, pullback, second leg down. So there is no reason to sell. Bearish downtrend played out. Structure is bullish. We take one tick lower. All the short sellers got trapped, picking top, and instant quick reversal. This is my first trade for the day. I actually took it on engulfing entry because the momentum was very, very strong. High-low confirmation of the second entry long. After price is pushed above EMA, you would expect to get a failed second entry short to continue with the direction of the trend that never formed. We broke the channel followed by overshoot, and we continue push lower. There's another two-legged pullback here. First leg down, second leg down. And also notice, you can view this as a first leg here, correction, second leg here. So there are two-legged pullbacks inside of a two-legged pullback. So you can see that the market moves in pairs of twos, and this is indicating that the correction played out. We're not looking for any wider channels like this, because I'm viewing every single downtrend in such a strong uptrend as a temporary correction only. Most of these reversal attempts will fail. So if it looks like a two-legged pullback, that's great. That's a good sign that the market may bottom and you may see push above EMA, and then you look for high probability setups. Because after you see a larger two-legged pullback, you have a first break of this main channel. So according to rules, you expect new extreme to be made. So I'm just expecting a high probability setup to go long. And what is the high probability setup? Fell second entry short. So we're pushing above EMA, we're pushing below, and we're pushing back up. So we have a new low, here new low, first entry short, pullback, break below the low, creating second entry short, failure, and counting from the highs, first entry long, correction, second entry long. So these are two high probability setups in one. Downtrend played out, two-legged correction. Also, there was some small support here that later on I moved a little bit lower. You're coming off the support, you expect new high, two high probability setups in one. This is giving you a good confidence in the setups that you're on the right side of the market and the EMA is holding. But notice, the first signal bar was bearish, so the follow-up bar is bullish, and you can treat this as a double bar entry. When the context is really good and the setup looks really good as well, even when the first signal bar is bad, sometimes you can wait for the next bullish signal bar to finish, and after you get a trigger above it, you can drop your limit order and you can enter here. And notice the high of this bullish bar is at the same level as the high of this bearish bar. So you're basically entering at the very same level, so you don't have to chase the market at all. I tried to take this entry. I was a little bit greedy. I put my limit order a little bit further back because the first signal bar was bearish, but it was a nice trade, two high probability setups in one. You expect new high, price is corrected in the form of a two-legged pullback. First leg down, second leg down. Short-term downtrend played out with the break and new low, indicating that the downtrend momentum played out, and all the analysis remains the same. The bullish bias still prevails. You still expect new high, and you have a first entry long, second entry long, great high probability setup context-wise, but the signal bar is 8-point big. So that means that the risk to reward ratio is really not favorable here. Unfortunately, you have to skip, but next time you see the setup like this with a smaller bar, you have to take it because it's a great setup and market continue working hard. And by the way, this is the best area on the chart where you're going to find high probability setups because you have uptrend working higher. Now you have a break and you have a deeper correction. And this is where all the short sellers are going to get trapped. But if you follow the price action rules and you expect new high, you want to buy low. And this right here is very low where you're buying. And this is where most of the high probability setups will appear if they form correctly. Unfortunately, the second entry long was gigantic. And this was a decent setup here. And after that, price has created new high. And also notice, once I see new high, I'm expecting correction or reversal. Now this trend was very strong, so I'm not expecting reversal, but I see push up, push down, push up, push down, push up. I see flat EMA. EMA was pointing up. Suddenly it's flattening, it's going sideways, already indicating a trading range structure. I'm just going to copy the support, put it at the top, and this will prevent me going long at the top after uptrend created new extreme. So prices are pulling back below the exponential moving average, below the resistance, and right now uptrend played out, but the bias still remains bullish. Also, one more thing, once you see a very strong bullish uptrend, even after there's a break new high, you still expect uptrend continuation. I'm not expecting for downtrend to be strong and reverse. I still expect for prices to pull back into trend range and for the bullish momentum to resume. So once the trend is so strong on its own, the chances are high that the downtrend will not start and the bullish momentum will eventually resume. So I'm just looking for these bearish corrections to play out. And here we have a bearish downtrend followed by a break, new low, another break, another new low, 2 pushes down, strong push above EMA, indicating possible resumption of the bullish momentum. We have new high, first entry long, second entry long, and new low, first entry short, second entry short failure. So 2 high probability setups in one. Above EMA, great signal bar. At the time, the congestion wasn't so bad. It is a little bit stacked, so it is a little bit more aggressive. It follows the rules. A lot of reasons to go long because this uptrend needs to get new high as well. I took this trade right here. I actually had a deep limit order and I managed to scratch the trade with 4 tick target profit. But if you're going for regular 8 ticks, you would have gotten stopped out. But this is a decent trade following the rules. So many reasons to enter this trade, especially when the downtrend played out. And overall structure was so bullish. After this entry, you don't want to take any entry because the congestion is getting bad, too stacked, and prices are reversing all the way back down. Followed by a break and 2 legs to a new extreme, indicating that the short-term downtrend played out. And remember, I'm expecting for uptrend to continue. This was a very strong uptrend, so I'm not looking for any wider pattern like this. I'm just looking for a failed second entry short above EMA to kickstart the bullish momentum, because we're right now combining the overall bias with the failed breakout out of the trend range. We broke the trend range, so most breakouts will fail, so expect push up, but we only have first entry short failure. We don't never get a failed second entry short. But after that, prices continue pushing lower, and notice prices finally eventually working to the upside, confirming the overall analysis. You're pulling back into a trend range following the price action rules, and right now we're looking for high probability setups to go long. We're looking for second entry long. There is a break, new extreme, but there's a possibility that the channel may be slightly wider. Why? Because notice, after the very failed breakout, you haven't even touched EMA once, let alone close below. So if I'm going to combine this strong bullish trend here with the overall bullish bias that was set for the day, I'm still leaning more towards bullish bias, and I can extend the channel just slightly, so there can be actually a potential channel like this. But even if you don't have a channel and you have a break new high, notice what you have. New high formed, first entry long, second entry long, which you don't want to take because the signal bar is doji. Okay, you don't want to take this doji signal bar, and you just had a small break and new high of the previous trend. You can get a high low confirmation setup or double trap, and notice first leg down, second leg down, larger visual to like a pullback, double trap entry because everybody going short on a failed second entry long too early against the main trend is going to get trapped. And this right here is a great larger visual to like a pullback and a double trap setup. Down trap it with a break and new low. Bullish momentum is still in the market, and market created new extreme. Notice I'm just following the short-term channels because right now I'm for quite a long time in a trend range. So I'm just following the short-term channels, break, new extreme. So market can reverse, break, new high. Now I have multiple confirmations of the resistance. Uptrend played out with the break and new high, indicated the bullish momentum played out. Strong push below EMA, confirming the bearish momentum. 1 tick higher above nice push bar here, and instant reversal down. Lower high, confirmation setup of the resistance bounce. Decent high probability setup. You would prefer to get a failed second entry long, which you don't get. You get it all the way down here, which is too far from EMA, too far down. So there is no high probability setup, failed second entry long. You only have to take a slightly more aggressive setup like this. But after you have a breaking new high and the resistance keeps holding, you know, this is a good reason to take such a nice signal bar, and it formed right at the EMA, which is always great for lower highs or high lows when they're very close to EMA and the prices haven't moved too far down. I'm not looking to go long because this downtrend needs to get new extreme. Uptrend played out with the break new high, strong push below EMA, and you have new low, first entry short, second entry short, a little push higher, push below, and you have big bearish bar, lower high again off the EMA. You expect to get new low for this downtrend, which you almost formed. You form double bottom, but they can be close enough so you can consider this downtrend played out. In trading ranges, you can see a lot of quick reversals. Notice the downtrend played out and quick reversal back up. First entry short, second entry short failure, but the signal bar is quite neutral doji, not full at the EMA. Market continues working higher, pretty much no setup here. Market push all the way back down, but you don't really get no setup here. Again, the lower high is bullish bar here, far from EMA. You get a second entry short, but had this signal bar been bearish, this would have been better. Second entry short and a full second entry long after failed breakout, followed by a big bearish spike like this. But look at the signal bar, you know, pretty much no setup here. And then the last setup for the day that I marked, new low, first entry short, pull back, second entry short, failure, reversal pattern. After that, market close it. But you can see what kind of patterns you're looking for. Once you have a break in your extreme, you can see you're looking for failed second entry short or failed second entry long. Sometimes you can take a good lower high, high low if the context is good. Uptrend working higher, break new high, perfect price action rules, followed by correction phase, trend range, and we stayed in the trend range for the entire day. So we have to switch the rules. After you broke lower here, which you're not looking for a wider pattern, because most of the times this bullish momentum will prevail and the bullish momentum will stay in the market. So expect for this breakout to fail and for prices to push all the way back up. First leg, pull back, second leg down, you exceeded it a little bit, and then you can pretty much switch to trading range rules. Always try to follow the channels. When the main bias is this bullish, draw the corrections tight, and always try to visualize the two-legged pullback so you can identify the end of the correction, especially in trading ranges. It is very typical in trading ranges after two-legged pullback for market to pivot and change the course of the market. So I hope you found the video helpful, educational, and I'm going to see you guys in the next one. Take care, everybody.